Welcome back, everyone. Today, we're going to be going over my EURUSD swing trade analysis. This was a 1-week swing trade that I took. We're going to be diving into TradeZella so I can show you what that trade actually looked like. So let's go ahead and hop into it. Now, looking at this trade, it actually closed at my trailing stop at 1.1%, as you can see here. So it did not hit my targets that I was looking for. But as you can see, we got about 47.9 pips. And if we actually look on what I was targeting, my initial target was 8 grand or 8%. That's what I was looking for this particular trade. I marked it as 5 stars. Reason being is because everything matched up with my A+ setup on what I was looking for when I went ahead and I took this trade. So let me go ahead and let me show you the attachments that I've added to TradeZella, and let's just jump into it. So if you're looking at the dates, January 7th, so this was last week, today filming January 14th, I had noticed my 3 crows pattern playing out here. So I had made my entry. So for me, that is an A+ setup. That is what I look for when I jump into these entries. And initially, I'm targeting to the downside. So what I was looking for was targeting parity. Now I react to price movement, as you can see here, but I don't try to predict. But I know parity is a psychological price area that we have reached in the past. So if we continue this downtrend on EURUSD, that's initially what I was looking for, and just to really swing this trade and see how far it could get me. So this was my initial entry here. Previously, I had entered on the 3 crows on this candle that you see here. Price did come back internally. It did knock me out of the trade. When I saw that we had started the same pattern once again, I was targeting the downside. So let's really see how that played out over the course of a week. So really pulling it up here, we did start to break structure, which was awesome. I like that. We went sideways for a little bit on this big red candle here. You can see non-farm payrolls had come out last Friday. Price moved to the downside. We swept the liquidity down here, continued to break structure. Price did, however, come back internally. Now, my trailing stop after almost about a week, I usually tell myself I'll wait about a week to manage my stops. But I would say by about market open Sunday to Monday is kind of when I was like, okay, where can I put my stops? And I did like price right above before news had come out last Friday. Typically, really what I was looking for was for price to come back internally. If we chopped around in this area here and continued further to the downside, that's initially what I would be looking for. Of course, targeting the 1.0000 parity level. But price broke structure here, as you can see, pulled to the upside back into where my stops were. So I got knocked out for 1.1%. And typically, that's really what my strategy is. A lot of people can watch this and say, you know, isn't it kind of greedy that price had fallen to the downside here? You're up quite a bit, and price came all the way back to stop you out right before news. You could say that. However, with my particular strategy, I am a swing trader and I trade for longer durations. You can see that if you look to the left, based on my particular pattern of the 3 crows that I presented here, to where price had fallen to the downside, we had chopped around, price had broken structure again to the downside. These are the types of movements to the far left that you're seeing here that I'm typically looking for price to continue moving in my favor over time. I'm typically trying to take trades less per month. I'm definitely not a day trader, and I'm trying to trail stops and let the market take me out of my position. My thought premise behind my strategy is when price is moving in my favor, I'm okay with the market taking back some of my open profits just to see how far the market will go and how much I can make on any given particular trade. Because at the end of the day, for me, I'd rather see the market move 300 pips to the downside and be able to capitalize on that move versus taking profit to this downside here, let's say making 150 pips or so, and then just seeing the market continue in my favor. Because I'm not trying to trade my profit and loss. I don't want to be looking at my P&L. The market doesn't know what my P&L is. I want to trade the charts and not my emotions. Now, there's a big reason behind why I wait a little while before I do manage my trades. And there's a reason why I didn't trail these stops a little bit further, as you can see, as price continued to break structure here. And let me just show you why. And I'm going to bring that up here. So let's kind of come back here. Let's go back to trades. And we're going to go look at a trade that I actually took in December. And it was on NZD USD. So let's go ahead and pull that up and see what it looked like. So this was a particular trade that, looking at it, I had given myself a 1 star, and I'm going to get into why I gave it a 1 star, with my initial target looking for just shy of 12%. So pulling that up, if I'm looking at the attachments here, what I want to see is the same pattern. As you can see, I had my 3 crows. We have a third bearish candle on the 4-hour here, a little bit early before the low of the previous candle. Price had initially moved to the downside, broke structure. We had broken structure once more to the downside. We had swept all this liquidity down below these lows here. As you can see, price did pop back up, slowly but surely back into this range. I had trailed stops to the candle before we broke structure again. And to me, I had moved stops too soon. All right, so I had only been in this trade for a couple days as opposed to 5 to 7 days, and didn't let the market, I kind of say, marinate long enough for me to trail my stops. So I got knocked out here in a profit, just like in the EURUSD trade that you saw. But moving on to what that trade looked like in my original targets, this is the premise on why I do what I do when it comes to my strategy. As you can see, price pulled back into the range. So external back to internal. Okay. Price came back to the lows. At this point here, if I were still in the trade, seeing price chopping around these lows, then it'd been a little bit over a week or about the week time frame, I can start looking and seeing where price is and where I can manage my stops. From there, price continued. And as you can see in the photo, targets were reached to the downside, right? So that's a big reason as to why I'm patient when starting to trail my stops, when the position starts going in my favor. I initially want to see, hey, is price moving in my favor? That's 1. 2, is price continuing to move in my favor for at least a week or a little bit more? If it is, and I don't get knocked out of the trade like you saw here, awesome. I can slowly start to trail stops after about a week. And then really from there, as price continues to move in my favor, keep trailing stops. So this was the reason why this year, going into 2025, why I really decided that I'm going to take my time to trail stops, see how much of the move I can gather. Once again, I'm not trying to be perfect. I understand that you only need to catch a large portion of the move. I'll never be perfect in getting the entire move. I know that, but I'm more than comfortable hitting my my trailing stop and getting knocked out on not on this trade, but if I go back to Euro USD, I am definitely more than comfortable getting knocked out in profit on Euro USD, and then knowing that really from there, if it were to work out, that the profits would be, in my case, looking at it from here to here, if it had continued to work in my favor, it would turn into a home run winner. And that's really what I'm looking for. I'm looking to manage risk appropriately. I do have a risk calculator. And for me, a home run winner would be a couple hundred pips, meeting targets, not risking a whole lot on the trade, risking like what I did here, risking about, I think it was like 1.08% to make, as you saw, 8%. So that's really what I'm looking for when it really comes down to it. So I'm totally okay with this, made 1.1%. If I get another position and we're still looking like EURUSD wants to continue to the downside and I'm able to get those targets, it shows fruit that's why I do what I do when it comes to this strategy. So anyways, I'm looking forward to what this is going to play out for in the long run throughout the course of 2025. But I appreciate you watching. If you have any questions, feel free to comment below on X or on YouTube. And yeah, I'll feel free to share more of this as time goes on. But I hope you enjoyed this and have a great rest of your evening.